Namaskar, this is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. The Reserve Bank of India has now been issuing a monthly bulletin on the state of the Indian economy as it analyzes with reference to certain specific critical parameters and perspectives that the Reserve Bank thinks are material. The December bulletin of the RBI on the Indian economy has been recently released. Even though statements that emanate from the Reserve Bank of India, any forecast or any estimate of the RBI tends to be far more credible and reliable than as compared with those issued by the Ministry of Finance. Despite that, any bulletin, any forecast, any estimate is as good as the data that it is founded on. If the data is erroneous, the forecast is also bound to be erroneous. And if the data is incomplete, the forecast is also bound to be incomplete and not trustworthy. We all know that India has had huge gaps and deficiencies in the matter of gathering of data related to the informal and the MSME economy, the MSME sector of the economy. And also, we do not factor in data related to the black economy. The black economy may be illegal, but it certainly is there. It also has a contribution to the Indian economy, but that element also does not get factored in because it is not measured. To the extent of these, there is a lacuna in the data that is gathered. And because of that, any forecast that comes from authorities, including the Reserve Bank of India, to us, to that extent, is inadequate, it is incomplete, it is lopsided, and of course, it can't be trusted to this extent. Therefore, a bulletin or a forecast of the Reserve Bank of India, which is primarily founded on data which comes from the formal sector and which does not take into account that which relates to the informal sector, such a forecast can't be truly applied to the informal economy, or it cannot reflect the state of the informal economy for the simple reason the data has not been included in it. So let us see what is the state of the Indian economy and where is it headed to as per the analysis of the RBI in its latest December bulletin. While we consider the Reserve Bank's bulletin as an authoritative statement, we must yet take it with a warning, with a caveat, and which is the best of economic analysis and forecast can be undone in case there is a resurge or an upsurge of the coronavirus or a spread out all over again. And that also applies to the Reserve Bank's bulletins and forecasts. In case the corona spreads out suddenly all over again, then the best of analysis and estimates is going to be proven to be wrong. The RBI's forecast for the month of December is on a few points. The bulletin is on a few key areas that the Reserve Bank thinks are material. The Reserve Bank's bulletin talks about the state of the Indian economy at present. It then talks about indicators of activity in the economy on a real-time basis. It then also speaks about a half-yearly review of the state of the government finances, the center as well as the states. It then speaks about recent trends in lending by banks. It then talks about the outlook of the services and the infrastructure sector in the country. The bulletin also discusses the dynamics of inflation both in rural and urban and their interplay. And it also speaks about the exchange rate violations that India has witnessed and how were they handled by the Reserve Bank of India. Let's discuss a few statements made by the Reserve Bank in its bulletin. Regarding the state of the Indian economy, the RBI says that the economy has started reflating at a very fast pace, at a pace that is so fast that it is beating all possible expectations. While the economy seems to be reflating, but it is a very comparative statement. If you compare the state of the economy today with last year, you will not agree that it is reflating. It would seem to be deflating. This comparison or this statement is made by the Reserve Bank comparing the state of the economy in December or November with that what it was in April, May, June, July, August. Of course, it will look better, but it is not adequate. It is not the best of comparisons. Moreover, while the Reserve Bank says that, while it claims that reflating is happening, it is more focused or it is based on the data that came from the formal sector. It is not talking about the state of the informal sector, and we do not see the informal sector having any such revival or recovery where we might say that there is a reflation happening in the economy. So to that extent, the Reserve Bank's statement, according to us, stands corrected. The Reserve Bank then says that interest rates are at a multi-decade low. While the RBI is of course correct when it says this, but the point to be noted is that despite interest rates being at a multi-decade low, yet lending is slow, or rather it is negative in many sectors. Bankers are not willing to lend and borrowers, the right ones, are not willing to borrow despite interest rates being at a multi-decade low, as the Reserve Bank says. So there may be supply of money at cheap rates, but the demand is not there, and that's a matter of concern. The bulletin of the Reserve Bank then further says that the Indian economy is on a faster growth trajectory. In saying so, we think the Reserve Bank is comparing the growth rates of November and December with those that were witnessed in the first quarter of this financial year, which is April to June, and probably also the second quarter. But then, that according to us is an erroneous comparison. Compare the growth rates of November and December with those of last year and then take a call whether we are growing faster. This is just a comparative statement, and that too, according to us, is premature. It is premature because we are seeing growth being on a roller coaster ride, going up and down in months after month. A couple of months may do better, and after that the growth dips. We saw the growth or the demand coming back in the months of October and November because of the pent-up demand and because of the festival demand. And then in November, after mid-November, after Diwali season was over, the growth fell back again. So too early to conclude, according to us, that growth is on a faster trajectory. There must be some kind of stability, durability and sustainability before we are able to conclude that. And thus, we are not in agreement with what the Reserve Bank contends. We would prefer to wait and watch. Further, in respect of the economy as it was, the bulletin says that the Indian economy witnessed a sharp fall in the months of April. That's because there was a complete lockdown. The Indian economy was locked indoors. We were shut indoors. Economic activity had come to a standstill, and therefore there was a sharp fall in the month of April. The economy then started recovering according to RBI from the months of June and July. Obviously, the lockdown had started getting released, and for that reason, economic activity started coming back. The Reserve Bank then says that October witnessed a sharp upturn in economic growth in India, and that is because the festival demand was being met, production had gone up, demand was coming back because of the festival and the pent-up demand of the lockdown. And so, a sharp upturn in economic growth in the month of October. But then, the Reserve Bank says, after mid-November, the growth started moderating. In other words, there was a dip in the growth rate. Thus, while April was a complete lockdown and a sharp fall, October witnessed some kind of a peak, and after that, growth has been sliding down again. According to our experience, in the month of December, growth has been slower than what was witnessed in the second half of November also. Further, in respect of the state of the government finances, the bulletin says that government revenue has been severely impacted because of the lockdown, because of Corona. And that is reflected in the tax collections dipping by 25% compared to the target so far this year. While we think that the deficit in collections is even more, but even from official statistics, it's very clear that government revenues have been eroded. While tax collections, government revenues have been eroded, that has not been the case with government expenditure. And because of that, fiscal deficit has shot up. As against the budgetary estimate of fiscal deficit being at 3.5%, the year is expected to end with fiscal deficit of about 8%. It's more than double of what was estimated. That's a reflection of the COVID crisis on the state of the government finances. Interestingly, while the government's fiscal situation has eroded, yet the RBI bulletin says that there is still scope for the government, both center and state, to give further fiscal support, fiscal stimulus to the Indian economy. So, unmindful of the rising fiscal deficit, the Reserve Bank nudges to say that there is scope for further fiscal support to be provided by the state governments as well as by the central government. In respect of currency volatility, the Reserve Bank says that in the month of March, once the lockdowns were announced, emerging market currencies witnessed extreme volatility. And the RBI says that it managed to curb it because of various measures that were taken, and the rupee has been relatively stable. What the RBI primarily did was it bought away all the surplus dollars that came in the system. And today, India's forex reserves are at an all-time high of almost $580 billion. And by virtue of this kind of copious purchasing of dollars by the RBI from the markets, the US today has labeled India and has put India under its watch list of currency manipulating nations. But nevertheless, the fact is that volatility in the local rupee has certainly been curbed by the RBI because of its various measures. Finally, the bulletin says that sentiments of banks and bankers to lend have improved. While sentiments may have improved and it might look better, but the fact is it has not translated in reality, and there's no big upsurge in lending and borrowing that has taken place in the Indian economy. In fact, it continues to be subdued and it continues to be in negative territory as far as the MSME sector is concerned. Thus, on the whole, we think that the Reserve Bank's analysis of the Indian economy has been too optimistic and it ignores, in our opinion, certain real economic parameters. It ignores the real economy as we see it. And what do we see when we do this kind of analysis? We see that NPAs are rising. We see that defaults are taking place on a bigger basis in the banking system because of the poor condition of corporates and borrowers. We also see that joblessness continues untamed. We see that confidence of the consumer and the businessman is missing. We also see that demand has not come back. After all, if confidence is missing, demand is not going to come back. And after the festival upsurge, we are witnessing demand dipping again in the month of December. And we also see a crisis in the informal and the MSME sector. And we would factor all those in. And with that being factored, we would tend to not be as optimistic as the Reserve Bank has been in its analysis. But as we said, the Reserve Bank's forecast, the Reserve Bank's analysis and statements are certainly more credible and reliable than those of the government. And to that extent, we would take cues from them. This is Akhilesh Bhargava signing off till we meet again. Namaskar.
Hello everyone. HW News English is 2 years old now. When we started this venture, we promised ourselves one thing, that news should remain free, because right to know is the right of every Indian. But to keep news free for everyone, we need support from some of you. And thus we have rolled out membership on our YouTube channel HW News English. But mind you, the membership is completely voluntary. The programs that we were doing earlier, that we are doing now, will continue to remain free. First level is a basic level. Here, you can be our supporter by paying Rs 199 per month. This membership gives you certain perks and benefits. The perks include unique badges in front of your name, a live show from Mr. Sujit Nair and from Mr. Akhilesh Bhargava per month for our members. You can also vote in some exclusive members-only polls. Now the second level is Super Supporter. Here you can be our Super Supporter by paying Rs 3,999 per month. This membership will include every perk that comes with basic level. Additionally, our Super Supporters can be a part of a WhatsApp group where we can have discussions and suggestions on various topics. The second perk includes a gift pack with our merchandise. And the third perk is a Google Meet with Mr. Sujit Nair, where you can join the meet and ask your questions to Mr. Nair face to face. Lastly, if you like, we would give a shout out to our super supporters in our programs. So, hope to see you soon with our badges.